What's going on, dividend chasers? It's the Dividend Bloodhound here with another investing episode. In this episode we're going to talk about 3 top USA stocks in terms of dividend growth, large cap growth and speculative. I'm not alone in this venture either. Jason over at JMAC Investing kindly responded to my request to do a collab on this subject. I'm super excited to bring you his 3 US selections for the aforementioned subjects, and then my 3 selections from the UK market will appear over on his channel at the same time. So do please hop on over to JMAC Investing and check that out. If you enjoyed this video over here, of course, then do please subscribe and like the video here and get involved with my channel, even tick that notification bell. But yeah, as this is a collab, of course, do hop on over to JMAC Investing to see what he's got on the other side as well. That being said, I'm going to roll the intro and hand you over to Jason from here on out. I'll see you on the other side. Catch you later.
Hello everyone, Jason from JMAC Investing. I want to first take a minute here and thank Josh for reaching out to me to do this collaboration. We began to discuss coming up with the concept, and we both agreed on doing he doing UK stocks, I doing some US stocks, but we didn't have a defined format. And I just threw out there, let's do sort of a variety, because I started off as a dividend growth investor and have now kind of just using all of the many facets of the investing arsenal that are out there, everything from spec stocks to growth stocks to dividend growth stocks as well. It's still a big part of my portfolio. Josh is dropping 3 UK stocks, 1 spec stock, 1 growth stock, and 1 dividend growth stock from the UK over on my channel, and I'm taking up 1 USA spec stock, 1 USA growth stock, and 1 USA dividend growth stock. So that being said, let's jump into it. The first company we'll look at, which is my spec stock, I actually just dropped a video on it, so it's fresh on my mind. You may or may not be familiar with my channel. So that being said, I want to go ahead and introduce you to Grow Generation Corporation. Ticker symbol on it in the US is GRWG. What this is a specialty retail company that sells, they're the leading player in hydroponics and also the green space, I guess you would say, which is becoming legalized here in the States and abroad, across the globe. So it is a growing space, and so getting into a company like this early on, yes, while it is speculative, so of the 50 states in the US, it's only legal in 10. So this particular company has retail stores in all 10 of those, and they're growing into having stores in all 10 of those by the end of 2021. But it's very, very early into this company. That being said, let's jump in and take a look at some of the fundamentals of the company, see how it's growing, and see what it's doing. Okay, so here you can see, because it's a spec stock, and I would call it also a growth stock, it has a pretty high price to earnings ratio, which with growth stocks you almost kind of just throw that out the window, really. But you can see very strong earnings of late, and the last 4 earnings, they've had revenue growth of over 100% every quarter. Jumping into the revenue growth of the company, you can see it is continually growing with estimates this year of $172 million, and next year, 2021, revenue estimate of $253 million. So a phenomenal growth story that this is becoming, no doubt. These guys have a fabulous balance sheet. Total debt to equity only 12.87%, so they have less debt than they have cash on hand. So that's a speculative stock that I wanted to put on your radar. Go check out my most recent video if you want to find out more about Grow Generation. All right, so that's the company number 1 and the stock number 1, the spec play. We'll move right into the growth company, the large cap growth company, which in this case is kind of trying to take a contrarian view of this and not talk about, because here in the U.S. we have, the huge mega cap. We've got the Apples and the Amazons and the Facebooks of the world. But one I think is very underrated and not talked about as much as the FANG stocks, as they call it, is none other than Adobe, ticker symbol ADBE. So Adobe, they coined themselves as the digital experiences company. Adobe has pretty much three categories, or three growing categories. That is their Creative Cloud, their Document Cloud, and their Experience Cloud. So they have a suite of products called the Creative Cloud, which is all of your, so pretty much I'll say majority of content creators that really take content creation serious video-wise use Adobe's Creative Cloud and use the Adobe Premiere video editing software, and or to get videos out quicker and easier without much. On a scaled down version, they have a Adobe Premiere Rush as well, but they also have obviously Photoshop and Illustrator, and just an entire lineup for image editing software to video editing software. Then of course they have their Adobe PDF software, which they've also incorporated digital signatures into Adobe. Let's look at some fundamentals of the company. Here you can see Adobe is trading at a pretty good share price of $473 US. So, but you can see the meteoric rise, and it just doesn't get talked about that much. A market cap of $226 billion at present. I'm going to talk about a pretty good looking historical earnings, and here's the EPS. You can see it's just constantly growing quarter over quarter, and earnings beats are very normal on both ends, EPS and revenue. And you can see just for years it's been growing at a 20 to 30% clip. If we jump over and take a look at their revenue growth year over year, I mean, just the most consistent looking chart you ever see. This year, revenue estimate of $12.75 billion with a B, and next year revenue estimate of almost $15 billion with a B. And again, that's their earnings trajectory. And then of course, looking at the balance sheet, have a total debt to equity of 43%. So not the best balance sheet in the world, but they have the growth to kind of sustain such a balance sheet. So that is my growth company, and like I said, one I feel doesn't get as much love as it should. And so if it's never been on your radar before, check it out. Adobe, ticker symbol ADBE. And that leads us right into the third and final company, which is a dividend growth company. Again, here I'm taking a contrarian approach, and hopefully presenting you a company maybe you haven't heard much about because it's not talked about very often. It's in my portfolio and has done very, very well. That company is no other than Fastenal. Ticker symbol is FAST. So Fastenal is a industry leader and global producer and distributor and manufacturer of a wide-ranging industrial and construction products, fasteners, safety equipment, etc. But they're a very adaptive company, and over the course of the years have adapted their business model to the changing times. Just like during this pandemic, they've shifted, and most of the revenue generation has come from a lot of the safety product lineup rather than the fasteners and the construction products. So the safety equipment and products that they own, that lineup has been the growth driver right now. And they also do something sort of unique, where when there's big construction projects, across the U.S., whether it be a skyscraper going up or a large university having an expansion, big government projects, just huge construction projects, or it could be right on down to smaller projects. What Fastenal will do is they'll come on site and have consultants there and salespeople on hand selling products. They've even built some vending machines, and they bring those out onto the projects and set them up, and they are constantly in discussions with the supervisors and the project managers of the construction projects. So they're keeping inventory on hand so that way the construction companies never have to go out and seek for products that are needed. Fastenal just keeps them on stock on hand. So it's a pretty ingenious business model, if you ask me. And so it's a long-term hold in my dividend growth portfolio, one I plan to hold for many years. And I will apologize up front because these three companies, like many of the really good companies in the U.S. right now, are really frothy, or really kind of just running up like crazy. But these are three that I believe in. So I didn't want to, while I do love a good value play, I still want to promote really good companies that over the course of decades will produce wealth. Let's take a look at some of the fundamentals. All right, so here we go. You can see the chart here. You can see the 1 year as a dividend, an industrial dividend growth company is up 57%, believe it or not. Look at this chart. If you go max on it, I mean, kind of looks like a little bit like Adobe, doesn't it? And it's an industrial company. Pretty crazy. PE at 33, which many would say is pretty high for a blue chip dividend growth company, but we'll get into it, and we'll take a look at some of the fundamentals and the reasons it just continues to overachieve. And this one we'll first look into, since this is a dividend growth company. You can see they've got dividend growth of 23 years, so they're coming up on becoming a dividend aristocrat. A really beautiful 5-year dividend growth rate of 11.7%. Payout ratio, this is fairly normal for the industrial sector to be in the 60, 70, 80%. So I would call this not high in the industrial. And a dividend yield current of 2%. If we look at their earnings, a pretty consistent earnings beat. Our most recent one, a 10% revenue year-over-year beat. Revenue of $1.5 billion. And you can see the EPS continues to grow. Revenue continues to grow. That's why you pay a little bit of a premium, because it just continues to be on a tear. And you can see the EPS, while a little bit choppy, but you can see 2021 they're expecting it to expand some more. And looking at their revenue stream, just continuing to grow. Although, obviously this isn't a growth company. Like I said, this is a dividend growth company. So you're not seeing the expansion like you would with an Adobe or Microsoft or Amazon. But nonetheless, just a good upward chart on the revenue. And from a balance sheet perspective, total debt to equity 23%. So I've noticed because I do follow this company, that they have been getting their free cash flow balance up. So total cash on hand of $200 million. So a little bit lopsided on the debt, but like I said, they have high margin business. So taking on some debt is, in their scenario, is beneficial. So there you go. Those are the three companies that I wanted to present to you today. Maybe something you've never looked at. That's what I'm hoping. I'm hoping these are companies that maybe you've never had on your radar, and that you could maybe do a little bit more of a deep dive, into these U.S. companies. And like I said, Josh is dropping his 3 over on my channel, so be sure to jump over to JMAC Investing. That's my channel, and his UK picks will be over there on my channel. This has been a real fun collab. I want to thank you again, Josh, for inviting me to be a part of this with you, and hopefully maybe we can do it again, or do a live stream, or do some other type of collaboration, because it's pretty fun. So that's all I got. Till next time, deuces.
Hey again, guys, welcome back. I hope you enjoyed those 3 stock picks there. Grow Generation is an absolutely excellent speculative choice. There's some real potential in that industry at the moment. Adobe is another one that's not actually talked about that much. As Jason mentioned, most people usually go for the FANG stocks and then don't really expand out much from there. But Adobe is right up there with some really impressive revenue beats in the past, and has got a very bright future ahead of it by the look. And then Fast at the end there is also a great company for its growth, dividend growth in the future. All 3 of these companies, if I hadn't already already invested in Adobe, which I have. The other two are now certainly on my radar, and I think they should actually be on your radar as well to have a look into, because I think they are great. That being said, just another massive thank you to Jason over at JMAC for getting involved in this collab. I've really enjoyed myself. It's been great, and I hope that we can work together again in the future. It's been great, and I will see you hopefully in my very next episode or over on Jason's channel as well. See you around. Bye bye.